Brad Williams, Excel Primed. Let's look at future value, present value, kind of in a bass-backwards approach. What do I mean by bass-backwards approach? Let's take a look. Calculate 25-year mortgage payment based on $198,750 loan. How about we look at this from a different angle? $198,000, 750 loan at 6% is the equivalent of saying, how much interest am I going to earn on $198,750 for 25 years at 6%? Now, I'm thinking from the lender's point of view. How much interest am I going to earn? On the flip is, how much interest am I going to have to pay for 25 years? You can look at it from both angles. You can look at it from a present value point of view or a future value. This is the cost, $265,000. The interest rate is 6%. The term is 25 years. Down payment 25%. The loan amount $198,750. Monthly payment is $1,280.55. What is it? All we're saying is, what's the future value of this thing? We're just gonna take this number, 6C5 divided by 12, because how many periods are there? C5, interest rate, divide this by 12, because it's monthly compounding. C6 times 12, what's C6? Terms and years, they have to match. Negative C9, that should be 198,000. Rates, number of periods, present value. The present value turns out to $1,280.55. Talking points: based on a fixed periodic payments and a constant interest rate, the payment function computes the required payments for an annuity. An annuity is a series of equally spaced cash flows. Because mortgage rates are annual and terms are stated in years, the rates and periods in this example have been modified. The rate is divided by 12 to obtain the monthly rate, and the number of years is multiplied by 12 to determine the total number of monthly payment. C9, which stores the loan amount, provides the present value. As a loan represents money owed in a cash outflow, this value is made negative. I didn't put the negative sign in there because the red is a distraction. I think you know, if you have a mortgage payment, you don't need to be reminded that it's a payment, not a receipt. Always maintain consistency with the rate and periods. Okay, as I've stated, if it's monthly payments, you need to adjust this. The rate's going to be 0.5% per month. You could actually put 0.005. If you do that, you're going to need to change this to 25 times 12, which is what, 300? And then your payments are 1280. If you want future value, you can take this 198,750 and just go future value and then discount it, because that's going to be the value to the opposite end of this thing. 198,750. Loan amount, future value. Brad Williams, Excel Prime.